Hey there, it's Dave Keller with Market Misbehavior. Today we're going to talk about a pattern where you compare price and a momentum indicator like RSI. Today we're going to focus on the bullish momentum divergence. So we've talked about the bullish momentum divergence on this channel before. I'll put some links in the description so you can find some of our other discussions of this particular topic. But this is a situation that happens in a downtrend when the price is going lower, and instead of the momentum going lower as well, the momentum actually slopes higher. So you have the price going lower, but on less and less negative momentum. And that usually or often can indicate a likely bullish rotation, right? An exhaustion signal to the downturn. What's interesting right now is you're finding it in some of the beaten down groups, like financial stocks. We'll look at Charles Schwab, and also airlines. We'll look at Southwest Airlines here in a minute. Before we get to those charts, by the way, if you like the sort of thinking about technical analysis, market dynamics, investor psychology, behavioral finance, all those other things, won't you subscribe to my channel? Also, give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below if you had to pick between these two stocks, Schwab or LUV, Southwest Airlines. What would you pick today and why? Let's look at the chart of Charles Schwab here first, and I'm illustrating with the blue trend lines here what we call a bullish momentum divergence. Let's start by orienting ourselves to the chart here. We have the price in the top, 2 years of daily data using open, high, low, close bars. We have the 50-day moving average in blue, the 200-day moving average in red. So just from that alone, you can tell Charles Schwab, along with most financial stocks, has had a tough go of it in 2023. It really had not started off well at the beginning of the year, but it accelerated to the downside during sort of the mini financial crisis we experienced in March. Many would argue, including me, that we're probably not completely out of the woods yet, and I think we'll still be feeling the ripple effects of this sort of banking crisis for many moons beyond where we're at today. However, that initial sell-off in March was sort of that moment. That's sort of this waterfall decline you can see here. Now, instead of things finding stability and rotating higher, you can see that Charles Schwab, along with a lot of other financial stocks, continue to make lower closes through this period. So if you look at the lows in March and April and May, and I'm sort of looking at some of the closing prices here because March was sort of a real crazy day here on the initial sell-off, but connecting that to the close here and then sort of looking at the lower close there in May, you can see higher lows in the RSI. So the RSI, of course, is a measure of momentum. So how could this be the case where the price is going lower on higher momentum? Well, it goes back to how an indicator like RSI is calculated. It uses an exponential smoothing calculation, which is just a complicated way of saying it's trying to smooth out the price data in a meaningful way. So it weights the most recent data a little more heavily and then sort of aggregates that with the rest of the data that you have available to you. It starts with a simple calculation. When the stock closes higher, how much higher does it tend to go? When the stock closes lower, how much lower does it tend to go? And RSI is essentially a ratio of the average up day to the average down day. It does a little more smoothing, a little more averaging to try to make that a nice, continuous, and smoother series. But at the end of the day, that's basically what it's doing. When it goes up, how much does it go? When it goes down, how much lower does it go? And so if the RSI is at 50, which is pretty much where we're at today with Charles Schwab, it basically tells you the up and the down days are pretty even. And if you just visually look at this choppy environment we've been in over the last couple weeks, makes sense, right? We've sort of had, the average up days and the average down days sort of about even, right? Because you've had a lot of both during this period. But what's interesting is when the market's going lower, usually you see an acceleration in momentum to the downside, or the stock often becomes oversold. You'll see that a lot of times, like in April and May of last year. The market starts to sell off, you'll see the RSI become oversold. That really indicates that we've had an acceleration to the downside. But if you look in May and June of last year, you can see another bullish momentum divergence, right? Lower lows in price, higher lows in RSI, and that's what we're looking for potentially here. When that pattern happens, it often indicates that the sell-off has probably reached near the end of that run, because the weaker downside momentum suggests that the down days are not so severe, right? You're starting to either see some stronger up days or less strong down days that indicate a potential rotation. You can see soon after you had that first bullish divergence, you can see the rotation higher. That ended up being the low for 2022. Are we setting up for a simple scenario? Maybe, and I think that's why this is an important chart to watch. Now, what would you actually look for? The way that I think of it, I know some aggressive investors would buy on this sort of pattern just beginning, right? And that is a more aggressive tactic, right? You see the bullish momentum divergence, take a position, and then just get stopped out if the position doesn't work, right? So set some, stopping point using some traditional methodology, a percent move, an average true range move, maybe even just using the lows of the previous swing. And as long as we remain above there, you keep your position. We break below there, you'd exit it. I like to look for a little more confirmation to the upside. So I would be looking for a break above the 50-day moving average as an initial point of consideration. Also breaking above the interim swing high, which would mean Schwab would have to get above 55 to really complete that rotation to the upside. If and when those things happen, this would be a pretty valid bullish momentum divergence. Now, what's interesting is you're not just seeing it in places like financials. You're seeing it in some energy stocks. You're seeing it in some airlines, right? So we're going to look at Southwest Airlines here now. Southwest Airlines has been just an absolute dog of a stock for the last 2 years. You can see that by just the fact that take a step back from the monitor and look at when we initially broke below the 200-day moving average in July of 2021. We've remained below a descending 200-day moving average ever since. We had a couple times where we've attempted to briefly break above the 200-day. Every one of those times we failed and ended up making a new low soon after. That happened yet again, most recently after a swing higher in December, and then January of this year, we rotated lower, made a new 52-week low. That leads us to where we're at this week. Once again, though, similar to the chart of SCHW, we have a bullish momentum divergence. Lower lows in price, March through May, higher lows in momentum. And one important note, what I like, sort of a classic bullish momentum divergence would be the initial low, right, in March is oversold, meaning we really sold off aggressively. This subsequent low, we made a new low, but the RSI did not become oversold. And so what that means is the initial sell-off or that latest sell-off was a significant sell-off, a significant deterioration. But then when we made a new lows, it was on less negative momentum. And again, that often indicates a bullish rotation. Now again, an aggressive way to think of this would say, all right, that's the entry point, and then just use some sort of stop, maybe the low over the last week as a way to get stopped out in case it would rotate lower for some reason. I like to wait. I like to look for some sort of confirmation. So a break above the 50-day moving average in blue, which would mean a close above around $31 would be a nice start. Getting above this congestion area, just above 32.50 to 33, I think would be a nice completion of that rotation. A chart like this, though, I tend to be way more conservative because all that Southwest has shown me over the last 2 years is that it can go down, and it can go down consistently. So how do we tell when it stops going down? Well, a bullish momentum divergence is sort of an early warning system. That tells you we might be nearing an end. How do you tell it's an end? We start to break above sort of those levels. I would love to see it actually get above its 200-day moving average and stay there. And I'm willing to give up some of these initial gains just to know that I've confirmed that the trend is no longer down, but is much more likely rotating higher. So that is a breakdown of the bullish momentum divergence using price and RSI. Two particular examples, Charles Schwab in the financial sector, Southwest Airlines in the industrial sector. What do you think about this take on these two stocks? Do you agree with the fact that they may be bottoming out? And which do you find more attractive than the other? Let me know in the comments below. For Market Misbehavior, I'm Dave Keller. Stay safe, trade well. We'll see you again soon.